Z Trades here. I wanted to go into investing since I see absolute lunacy. If people follow someone, it's Warren Buffett. Uh, Bogleheads, The Road to Retirement. It's a great book, and I consider myself a boglehead as well. I really like their three fund portfolio. But I'm going to go into what my picks are and how people use Warren Buffett quotes to back their stupid, idiotic decisions. Um, these are two great funds right here. We got SPYG, S&P 500 growth. These are the biggest growth stocks. We have 2011, and what has it done? It's gone nowhere but up. Should I buy Apple now? Should I buy Microsoft now? Should I buy Amazon? Well, it's all in here. I don't have to worry about any of that. It's 49 bucks, right? From 12 to 49 bucks. Look at that. I mean, if you would have picked it up at the low here during the crash, you're already up a lot. This was just in March. 30 bucks with a high of 54. Come on. You don't have to worry about the little company that's inside this fund if it has bad news. Do I sell it? Should I average down? I don't know. You don't have to worry about that. It's all in here. And in fact, when they rebalance, they will dump the funds they'll dump the stocks that are not performing well out of these funds, right? So that there's only good stocks in it so that it only goes up. People always say stocks only go up. No, they don't. Do funds indexes of the S&P only go up? Yes. Does the S&P and the Dow only go up? Yes. The Nasdaq? Yes. Do stocks only go up? No, they don't. People never ever talk about small cap. They overlook it. We got VBK over here, small cap growth. This is very aggressive. I mean, come on. Over here in '09, 31 bucks with a high of 233 just the other day. If you would have picked this up at the bottom of the crash at 125 just a couple months back, now at 223. These two funds right here give you exposure to small cap as well as large cap, right? You could add mid cap growth in there though, but I don't like to because the management fee is fine. And a lot of the stocks that are in Vanguard's small cap growth fund are mid cap. You get a mixture of both, so it kind of covers both. So you're covering everything. It's a broad spectrum if you want aggressive growth. But, but, and also, guys, before I go into me bashing people's ludicrous decisions, I also have bonds, right? I can do SCHO. That looks like a big movement. That's 49 to 51. It's actually very stable. I don't make money off it. When things are getting toppy and I know for sure we're going to crash, I don't exit all my positions of SPYG and VBK. I exit a little bit of it. Maybe I'll go 60-40. 60% in VBK and SPYG, and 40% in bonds. When we tank, my portfolio hasn't taken a big hit. I dump the bonds only in big crashes like in 2018, 2019. I dump the bonds and I average down on the funds. It's very, very easy. I'm not trying to do it weekly. I mean, that's just a waste of time. But when we start getting really toppy, and RSI on a monthly chart or a 1 day chart is really, really overbought, where I see it's just an absolute obvious we're going down, I will dump some of them for a bond position. Right, I'll start slowly building a bond position. Let's just say 10%. And if we don't tank, that's fine. I'll just hold it. And we go higher and we go higher and we go higher. I'll 15% bonds, 20% bonds. I can do this over a course of a year, of 2 years. And if I'm really sure, I can be 50-50. And I'm still beating everyone else's portfolio with half bonds. I've been in half bonds and I'm up 28% this year with the crash in one of my IRAs. My other IRA, I'm up 62%. And it's a new IRA. It's a Roth. My SEP IRA is still beating everyone else. But let's go into what people will do, right? Oh my goodness. The next Tesla. Right? Oh my gosh, CCL. They have a whole bunch of bad news out. Let's grab this. This is going to rocket. It's probably going to go past all-time highs. Well, It hasn't. And look, if you would have just grabbed this on the at the bottom. You don't buy crap when the stock market tanks. You buy good things that are going to actually go up. CCL didn't even have a dividend anymore. They're not tech. They're not growth. At best, you would get a dead cat bounce, but it hasn't. It's at 12 freaking dollars. It's been at the same price for like 6 months. It's actually lower. It's lower. What else? What else? Let's jump into something else here. Let's just pull up SPYG over here. We can compare it to everyone's horrible decisions. I mean, come on. XOM, it hasn't been this low since, what is this, 2002? You know, come on. Look how low it is. And it's not a market leader anymore. Tech is a market leader. I'm not saying only invest in tech. I'm saying go for a growth fund, right? What else is everyone buying? The next Tesla, right? Solo. I mean, you guys just burn your money away, and then you get in it, and then you'll use stuff like you'll start regurgitating Warren Buffett quotes to calm yourself down, right? Buy when there's blood in the streets, right? I don't think Warren Buffett means some scam company, right? And plus, you cannot use Warren Buffett as an example. You know, with what is it, Occidental Petroleum? He's getting a special dividend from them that you all aren't getting. He's buying companies, and also the people that are a part of his fund. They're selling covered calls on the shares, and it helps mitigate risk on the downside. So you're not doing all that. You're not rebalancing your portfolio either. New people never rebalance. You know, they never trim and rebalance when their stocks that are running are high, right? And then when they're low, they dump them or they invest in bad companies. They just don't know what they're doing. So, and I mean, what are some hurts? I mean, I don't have to make an argument there. People were buying that and investing in it. Look what would have happened. You would have actually had money still left over if you had bought a growth fund. It's simple. And these things, guys, are beating the S&P. They are smashing through it. DKNG, it's hype. It's all hype. It's all hype, right? Um, well, you have in, let's see, when was March? So, yeah, you still didn't beat SPYG. Nothing that I'm seeing that people are talking about that they're investing in have beat these growth indexes. You buy it and you forget about it. That's it. Management fees very low on these as well. And what's another horrible company I can use as an example? And then people are investing in penny stocks. Penny stocks are horrible investments. Yeah, they're nothing but a buy today, sell tomorrow at most, maybe a 2-day hold. You know, or if they have an upcoming event, you dump it, you sell the news because they suck. They only go down. When they go up, they go back down again. Um, so when it comes to investing, be wise. In my opinion, these are there's many of the best indexes to buy. I mean, they're just absolutely fantastic and they do nothing but go up. And every time there's a giant crash, it's giving you an opportunity to buy it. No, 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 no. We'll get CCL though, right? NCLH. Why? Why? These companies aren't going anywhere. Look, when they were up, they were going flat. They were not making all-time highs, right? It couldn't break its high of 2016 before we crashed while the stock market was ripping. But you know what did? The two funds that I talked about. They crashed through their previous highs before the stock market tanked. You're not going to get over, your portfolios are not beating mine. I try to tell this to people in the dividend groups. You know, they're out here buying XOM, all those other horrible companies, Shell, what is it, RSDA, RDS, you know? I mean, come on. You're and putting all this money in here and look at the highs. what was it, 2000? Ooh, that was a long time ago, right? I was just out of high school before it was at its high. What was just at its high? SPYG. Whose portfolio do you think wins in the end? Because it's not yours if you're investing in stuff like this. I'll beat you in what, 6 months? You can have that position for a decade, and you're not beating me, right? Look at it. When was the last? I don't. It doesn't look like it was ever this low. I can't go back any further on this max chart. I guess March 21. All for a high dividend, so you can have minus 50% on your portfolio, and somehow you think you're ahead in the long run. If you're young, you don't need to worry about, you're not going to be living off it. And on top of it, a lot of you guys that are going for dividends are in individual accounts. So the dividends are being taxed, right? So then it's like another 30% knocked right off right there. So you don't have a 5% dividend. You've got like a 3% dividend there. On top of losing 50% of your investment. I mean, come on. Come on. BBK, SPYG if you want growth, right? If you want it slow and steady, you could, in my opinion, you do regular small cap with a regular S&P fund. No, not SPY. No, not QQQ. Okay? These two. These two, because the reason why I would do ITOT over SPY is because the management fees, it's like more than half. Go do the math on decompounding on a high management fee over 40 years. It's a lot. Now, I'm not buying SPY. Buy VOO, right? Or ITOT. ITOT, the chart looks kind of jacked here because it started right before the '08 crash, right? But it does track. It's basically the same thing as adding SPY or VOO. Look at the gains over the years. You can do VOO. VOO is fantastic. Or if you want everything, right? VTI, the total stock market fund. A little bit more expensive than ITOT or VOO. And IJR, you can have what they call a tilt towards small cap, right? Or small cap growth. I'm confusing you guys now. You guys, you adrenaline junkies, you want fast growth, you can literally snag these two. And if you're smart, you don't have to have a bond position. I know you guys always argue, bonds, treasury bonds are only yielding this XYZ amount. You can't make any money on that. You don't understand what I'm doing. How come my portfolio? Well, first off, my portfolio is beating yours. Second off, I'm not using it to make money. It's just a tool, a rebalancing tool. Where am I going to put my gains if both of these things are up 300% and I know we're going to tank? Do I sell them and cash out? I don't want to do that, constantly jumping in and out. I can just swap right over, which is almost the same, into a bond, right? And start building a bond position. And yeah, I am going to get a dividend payout. And if you have a bigger account, the dividends are going to be pretty big. And it's going to be reinvested back into your portfolio. Go ahead and hit the like button and subscribe to the YouTube channel. There's going to be more videos like this coming out.